Hi, Rudyard Griffiths here, the publisher of The Hub. Welcome to this, our Election 2025 show. We are on day 15 of the campaign, and The Hub is here each and every Monday to Friday, bringing you the latest analysis and insights on fast developing stories here in Canada, around the world. And let's start with what's going on right now in markets. We've got the S&P 500 just below 5,000. It's been a big sell-off. You can see the last few days there. We're going to have David Rosenberg up on the show momentarily to break it all down for us. What the heck is happening here? Where is this sell-off going in the days ahead? Let's get you also caught up on some latest polling from the election. We've got the overnight numbers from Nanos showing a little bit of a bump here for the Conservatives. Again, this is a three-day change. Basically the period after Trump announced these wild tariffs. There you see Mark Carney coming down a little bit. The NDP, wow, can you imagine that? 4.4%. So we'll have our favorite pollster, Daryl Bricker, later on the show in the back half to break down Ipsos's latest numbers. Finally, let's tell you where the leaders are today. We've got Mark Carney in British Columbia with an announcement in a couple of hours. He's later going to go on and meet with Premier Eby. Pierre Poilievre is also in British Columbia. He's got a big rally in Edmonton later in the day, 7:30 p.m., expecting thousands at that rally. And Singh is doing a campaign event in Toronto, followed by an announcement later this morning. We like policy here at The Hub, so here's what the parties have done over the weekend. The Liberals are out with a program to help apprentices fund their trades education, $8,000 credit. The Conservatives came out with a cutting red tape. They'll supposedly slash 25% of all government red tape within 2 years and pass a 2-for-1 law. So every new piece of regulation, two other older pieces of regulation need to come off the books. And rent control. The NDP coming in, as they have many times in recent elections, saying it's time to re-implement a national rent control strategy. So that's got you all caught up. Let's, though, jump forward to David and talk tariffs. David Rosenberg and joins Sean Speer, my editor and co-founder. David, always great to be in conversation with you.
Thanks, Rudyard, and great to see you again.
Yeah, likewise. Well, David, we're seeing some more selling pressure today, not as dramatic as Thursday and Friday, but we also heard over the weekend Scott Bessent and Lutnick, the Commerce Secretary, out seemingly holding the line on these tariffs, saying that they will be around for the foreseeable future. How are you gauging the market reaction right now, and what are you anticipating we could see in the coming week?
Well, look, we are in a bog of uncertainty. We've been in one for quite a while, and now it's accelerating. And remember that the stock market, half of the stock market, when you're valuing it, is about actual hardcore earnings. And then the other half is what is the multiple that investors are willing to slap on those earnings. And it's the multiple that is what John Maynard Keynes said was the animal spirits. When the market multiple is moving up, it means investors are getting more and more confidence over that expected future earnings stream. And when the multiple is going down, it means that investors are losing confidence. And so that's what's happening right now. What has changed really from the peak in the market in February isn't so much earnings. It's the multiple. It's the confidence and it's the nervousness and the response to this incredible shock. And it is an incredible shock. It's not like a COVID shock. It's not like a massive financial shock like we had in 2008. It's a different sort of a shock, but it's the sort of shock that creates tremendous uncertainty. And when you have tremendous uncertainty from a financial market standpoint, it means that investors are compelled to become more risk averse and add premium into the pricing of the assets that they're buying. So risk premium, whether it's not just the stock market. Look what's happening in the market for corporate credit. High yield spreads have widened out in a matter of 6 weeks by 200 basis points. Everybody looks at the stock market because they don't understand the corporate bond market. The corporate bond market has performed worse, in fact, the non-speculative grade market has performed worse than the stock market has. So it's a reflection of this uncertainty. And I think what happened at the Rose Garden last week was epic because you would have had Roger, you would have had pundits and strategist economists, and some of them were saying on other networks that this was going to be an inflection point to come back into the market because the uncertainty at least was going to be behind us. We were going to know what Trump was going to do on these reciprocal tariffs. The problem is that there's nothing reciprocal about them. They created this formula for these punitive levies, which is basically the trade surplus each country has against the United States, divided by their exports. And voila, that's why you have some numbers are, say, 10% and some numbers are 40%. Each country has its own number. Uh, and so the message was very clear, um, which is that the administration wants every country in the world that has a bilateral trade surplus with the United States to have it completely eliminated.
Yeah.
So it's not even really a tariff.
I
I
agree,
don't even know
David.
what you
Yeah.
want to call it. It's a ratio.
Yeah.
I mean, in one fell swoop, the effective tariff rate of the United States on the rest of the world went from 2.5% to an average of 25%.
Wow.
I mean, we are basically back. We've already taken out, if these persist, uh, goes over beyond what was done in the 1930s with Smoot-Hawley. So that's what we're in right now. I think people were taken by surprise at the extent of what these so-called tariffs are going to be. I don't even call it a tariff.
Yeah.
And people realize that, what are you going to negotiate? You can take your tariff rate down to zero, which is basically what Israel did ahead of the fact,
Yes.
thinking that they would be bypassed, but they weren't.
No.
So this is a message, and Donald Trump's been talking about this since the mid 1980s. He believes that trade surpluses against the United States are evil, that these are subsidies by cheaters and rip-off artists. The administration and all their economists, no matter how many PhDs from Harvard they have, seem to believe that trade deficits with the rest of the world are a bad thing. They have to be eliminated. And so there's nothing here to negotiate. The problem is trying to wrap around your head that this is an assault on a $33 trillion animal called global trade.
Yeah.
If global trade was its own GDP, its own economy, it would be bigger than the United States. It'd be the
Wow.
biggest in the world.
What a great
And
stat.
so we've just done a massive assault on global trade,
Yeah.
which has all sorts of spin-off effects throughout the global economy, and within specific economies and regions, big impacts on all industries because
Yeah.
even the service sector feeds into the goods producing sector. So right now we're in this bog of uncertainty, and we went into this stock market correction with multiples at 22, 23. Now they're down to 19. They're still above the historical norm. So although it's been gut wrenching to watch what's been happening, there's probably still more to come over the near term just to get the valuations in line with the historical record.
Yeah. Sean, why don't you
David,
jump in?
we'll come to the feedback loop and how it may manifest itself in the broader economy in a moment, because I know our listeners and viewers will want to hear from you on that. But before we get there, I have to ask, when looking at the declines that we've seen in equity markets in the past 2 days, are there any particular sectors that are notable in your mind, David? Any that seem to be bearing a disproportionate share of the brunt?
Yeah, what's going on with oil, David? I mean, boy, the declines here for major Canadian energy companies have been acute. Is that telegraphing, David, a bigger global recession risk? In other words, you're seeing longer dated energy contracts on WTI and Brent 6, 12 months out selling off.
I think that the oil price story has two sides. The first is exactly as you said. The market, generally speaking, is pricing in recession risk. And across the credit market, across the equity market. And so why would anybody think the commodity markets would be immune? And
Yeah.
you could look and see, I mean, copper was surging ahead of the tariffs. Now it's collapsed. The base metals have collapsed. And oil is very cyclical. So oil is peeled back for the same reason why the overall stock market is peeled back. Uh, and on top of that, OPEC Plus is talking about it, bumping their output increases next month. So you got the supply side coming back on stream from OPEC Plus at the same time that you're seeing estimates going down of global demand because of the increasing prospect of a global recession. So that's your story on the oil price. And it's what I would have expected. If you get recession risks, I can't name a time in history where recession risks get priced in by all asset classes and somehow oil emerges unscathed. You'd have to have one hell of a negative supply shock in terms of supply coming off stream to prevent oil from going down. But the whole commodity complex is going down. It's not just oil. And in terms of the broader question of where do you hide, well, I think that it's just a relative game. Nothing is immune from a recessionary bear market. It's a matter of degrees, and the old saying, "In the land of the blind, the one-eyed man is king." So the one thing that we know is that interest rates are coming down. The markets are pricing in more Bank of Canada cuts, more Fed cuts. So you want to be in the more defensive, non-cyclical, what I call bonds and drag, or the bond proxies in the stock market that have defensive characteristics and decent dividend yield, dividend growth attributes. You can point to utilities, that would be one. You can point to consumer staples, that would be another one. You can also point to various aspects of healthcare, which is, things that we need, consumer staples, which is basically, your cereal, and your beverages, the things that you need, not the things that you want. So
Hmm.
consumer staples, healthcare, utilities would all be making sense to me. I would really call the equity portfolio. If I had toes in the stock market now, I'd want to pick up yield because yield is becoming scarce with interest rates going down. And I'd want to at least be in the industries that won't get crushed in an economic recession. And those are the three that would stand out the most.
Yeah. David, I know you're a careful Fed watcher, all your days going back to Merrill as chief economist. Tell us a little bit about how you feel about Powell's remarks last week, where he seemed to come out, David, and take a little bit of the Fed put off the table, saying, in effect, this was inflationary and that his mandate, right now at least, in the absence of significant job losses, is to be laser-like focused on inflation.
Yeah, I was a little bit surprised at how strident his commentary was.
Yeah.
He's still describing the U.S. economy as being solid. I think that's now in the rearview mirror. What was curious is that normally Federal Reserve in the past tended to be a little more preemptive, at least in their tone. And there's nothing preemptive about it. He's basically, as always, concentrating on coincident to lagging indicators and basically telling us that yes, the economy is going to slow. He says there's no recession in our forecast, although I don't think the Fed's ever forecast a recession before, even when it's staring them in the face. And he's equally concerned over the inflationary impact of the tariffs. And it was curious, and this is what was so confusing, is he says on the one hand, well, he's not even an economist, he's a lawyer, but classic economists speak, on the one hand, um, we're concerned about that inflation is going to be more persistent because of the extent of the tariffs. But then he comes out and says, but there's no inflationary pressure coming out of the labor market. To which I say, well, if there's no inflationary impact coming out of the labor market, then the inflation is going to get snuffed out. There's no doubt that we're going to be in for a temporary inflation or price shock. But if there's no second round impact into the labor market, then there's no lasting inflation. It's just going to end up getting squeezed out because real wages will contract. And as real wages contracts, real consumer spending contracts, and that leads to lower demand. And then that brings you down probably to inflation rates lower than would otherwise be the case. And of course, we all miss transitory, and so did the Fed, back in 2021, 2022. But the reason why inflation wasn't transitory was because we had a huge mismatch in the labor market. The government was paying people not to work, And of course, because of the aftershocks of COVID, people were scared to go back to work. The economy reopened, and we had all the stimulus, and companies were looking for labor they couldn't find, so they had to jack up wages. So actually, what made that non-transitory wasn't the initial supply shock from COVID. It was the fact that you did have a period of time, a year and a half, a wage price spiral. The prices did get fed into wages. But here he's telling us that he doesn't expect prices to get into wages, but yet he's still concerned about inflation. And I'm wrapping my head, are you trying to find any excuse, not even to ratify
Yeah.
what the markets have priced in, which are basically 5 rate cuts? And he
Yeah.
wasn't willing to go there for whatever reason. And I can only say, Rudyard, that maybe it's because he has less than a year left in his term
Yeah.
as Fed chairman. And if he had to choose between recession or inflation, he'd probably choose the recession, because who
Yeah.
wants to leave after the inflation experience of 21, 2022,
Yeah.
where
Good
his
point.
credibility got impaired? He
Yeah.
rebuilt it. He did rebuild it. However, nobody remembers that Paul Volcker generated back-to-back recessions in the early 80s. You only remember Paul
Yeah.
Volcker, and he's revered for having killed inflation.
Yeah.
So I think that's basically, so it's telling me that the Fed is going to err on the side of restraint
Yeah.
for some time. So there is, like, whatever the Fed put is, the strike price is a lot lower than what everybody thought, say, several months ago.
Well said. I'm going to give
Yeah.
you the last question, Sean, because David's got a busy day of media interviews ahead.
Yeah, final question, David. Thanks so much for sharing your insight with our audience this morning. Just paint a picture for those who may not be in the equity markets themselves of how all of this might come to affect them. What are you looking for moving forward to give us a sense of how it's translating into the so-called real economy?
Well, firstly, I think that it all comes down to what your time horizon is. If you're a trader right now, or you have a 1 or 3 month time horizon, it's going to be gut wrenching. I'm getting asked all the time, about picking the bottom, to which I say, well, leave the bottom picking to the proctologists, because the rest of us aren't normally very good at it. But sentiment has been washed out enough uh, that we're building up to a capitulation point. And sentiment is very important for the stock market. So I'm thinking that in the next couple of months, we're going to be getting a great buying opportunity, so long as you have a 12-month view. I have no reason to believe that we necessarily hit bottom, but let's face it, just pure arithmetic, we're a lot closer now than we were 6 weeks ago. And you have to also understand that the markets will always overshoot to the upside and then overshoot to the downside. And we're probably going to end up overshooting to the downside. So I would say that, if you have cash on hand, or if you're like me and you didn't participate and drink the Kool-Aid at the peak in the market, you're going to get a great buying opportunity. But you have to understand, you must have right now a 12-month view. If you're going to ask me, and this is from coming from somebody who's notoriously conservative, I'm called a perma bear. Not that I think that's an excessive statement. But even if you believe I'm a perma bear, I'm saying right now, you could buy the market now, hold your nose, and you'll be up 12 months from now. But you'd have to withstand a lot more near-term volatility and pain. It's hard to know right now how this is going to end. Uh, if you think that the tariff file is going to end, then I would say that you got to be relying on the Supreme Court or Congress taking these powers away from Donald Trump. There was a time where Congress controlled trade and tariffs, but no longer. So something's got to change on that score. I would not be waiting around for Donald Trump to change his mind, and there's no negotiating. I don't think negotiations are going to go anywhere on this.
Yeah.
So either something changes exogenously that forces Donald Trump, um, almost takes the trade and tariff power away, and we rewind these actions that were announced last week, or we just have to wait for the market to adjust and overprice to the downside. I'd say right now we're between half and 2/3 away from the stock market pricing in a recession, which is probably going to happen. And so that's why I'm saying near term, I wouldn't say jump into the market with both feet. You can sort of scale in gingerly, in my opinion, because we're getting close to that point where the market's pricing in a recession, and then that's a good point to get in more aggressively. We're not there yet. Um, and it's at that point that when I can actually say, well, we have more than priced in the recession, And the way it's going, look, it could be a few weeks away. That's how dramatic this is.
Yeah.
And then, so it's basically, the markets will tend to overshoot in both directions, waiting for the overshoot. Now you're here now, another capitulation, which JP Morgan or it's Citi, UBS. Now everybody's calling for recession. And so you want to see more of that. You want to see capitulation. Remember that it's not just about fundamentals that drive the stock market. It's a whole bunch of things that drive the stock market, technicals, market positioning, but sentiment is very important.
Yeah.
And as that gets washed out, this, if you want to call me this perma bear gets a little bit more excited because I have the liquidity and cash to put into the market. I think we're going to get to a nice buying opportunity in the next month. That'd be my estimate right now. And then I'm going to say, for those that have a 12-month view, start getting in more aggressively.
Yeah.
Right now, I would say, look, you're getting paid to be in cash. Bonds, I think, are a good place to be. But I'd say in the next couple of months, they will not be the best place to be because I think a great buying opportunity is going to be opening up. We're not quite there yet, but we're building up to that position.
Yeah. Well said, David. Thank you so much for coming on the program. And I want to remind you, you probably don't remember it, but I had a conversation with you during COVID, and you called the COVID low on the S&P by 100 points. You told me what it was. So don't say people can't call lows, because you've done it, my friend. I was there to hear the conversation. Thanks so much. David's got a fantastic newsletter. Everybody go check it out, Rosenberg and Associates. We'll be sure to include a link to David's website in our show notes today. Well, Sean, so fortunate to have David on the program. Hopefully we can do some more of that with our listeners and viewers during this election. We don't always talk election politics on the show. There's so much else going on. Sean, before we bring Daryl Bricker on to talk the latest poll numbers from Ipsos, just your quick reaction to this weekend. We had the usual Sunday yak shows in the U.S., and it does sound, as David said, like the Trump administration is digging in here. I don't know. I heard multiple messages from the Treasury Secretary, from the Commerce Secretary, that these tariffs were here for weeks, months. It's interesting, Sean. It's a lot of what we predicted at the Hub back in November, that this is not about tariffs. This is even maybe not about entirely the balance of trade. This is about revenues, and this is about reshoring.
Yeah, there's a lot going on, but my instinct's the same as yours, Roger. I think that there are these immediate aspirations behind the tariffs, like, as you say, revenue and bringing production home. There is Donald Trump's own personal impulses, which, as David Rosenberg mentioned, has really been part of his political persona for decades. But you do get the sense, Roger, that in the past few weeks, people like Bisnet and to a certain extent Lutwig have convinced themselves that this is about a kind of broader rebalancing of the global economy. You get the sense that a lot of them envision themselves like sitting around the Nixon cabinet table in the early 1970s, right, when the U.S. When the Nixon administration took U.S. off gold and really reset the global trading system. If that is part of their own self-image, if that's how they're thinking about what they're presently doing, it seems to me, as you say, it gives them the intellectual basis to do a lot of things that they wanted to do anyway. And I think reason to think that this is probably going to be more permanent than it is transitory.
Yeah. Well said. Well, let's bring in our favorite pollster here at the Hub. He's the co-host of our top-rated podcast, Bricker and Spear, and that is Daryl Bricker from Ipsos Reid. Daryl, great to be in conversation with you. Back, I hope, in Canada.
Yeah, I'm back in Canada, back in Toronto.
Nice.
Looking forward to our conversation.
Nice cold beer available to you as opposed to that horrible stuff you were having to drink in London. Let's jump right into your latest poll numbers here, just to give our audience a quick snapshot of where Ipsos' tracking is at. This is from April 6. Daryl, walk us through this.
Well, what we're seeing is the Liberals at about a 12-point lead. Now, I should say that this came out of field probably mid to later, a little bit last week, and we have seen a bit of a tightening up. and some of the polls that have been over through a little later in the week and into the weekend. So I think that there's some potential that this could be an apex for where the Liberal Party is. But I would say what's consistent in all the polls that we're seeing are, first of all, the absolute cratering of the NDP. I think every single poll that's been out has shown a similar thing. The next thing that we've seen is whatever lead the Tories have had is dissipated. And we're now moved into a situation where the Liberals either are in lead in overall percentage vote, and we're at the higher end of that. Or if you look at the seat counts, even in closer polls, they look to be knocking on the door, as we said in the headline, to this poll of a potential majority. So I think that all of that is pretty consistent across the polling. So you can't, each poll is a snapshot in time. It's a reflection of what's going on at that moment when it was done. But one of the things that you need to look at is whether or not there's some consistency in what you're seeing, and we are seeing some consistent patterns in the polls overall.
Why don't you go below the hood a bit, Daryl? What of the regional findings, if at all, surprised you?
That at least in our polling, the Liberals are looking a bit better in Western Canada than we've seen in a while. So they're probably more competitive in the cities in Western Canada than they've been, particularly the prairie cities, than they've been in a while. So that's the first thing. The second thing is previously we had it a lot closer in Ontario. The Liberals seem to have opened up a bit of a gap in Ontario, which means that they're probably now leading in the 905. So all of this adds up to, when it comes down to the seats, a pretty strong position for the Liberal Party. But I would say that things are volatile. When they swing like 30 points over the space of 2 months, you know that they're volatile. And just depending on what's happening during the course of the campaign, you could see them go up or down. One of the things that I should note for everybody who's watching this is that one of the things that's really become apparent in public opinion research during election campaigns over the space of particularly the last decade is that as partisanship has declined, volatility has become more the norm, and particularly late volatility. So we tend to see a lot of movement in the last week of campaigns, and particularly the last 2, 3, 4 days of a campaign. And about 10% of the people we polled in the last election campaign here in Canada, and the last couple of election campaigns, actually made their mind up on the day of the election.
Wow.
So even though it looks like the Liberals may be in the lead, there's still a lot to play here. To play for here. It's very unstable, and I wouldn't be surprised if we saw a couple of swings and roundabouts between now and the end of the election campaign.
Rudyard, may I jump in there for a second, please? Just to have you follow up, Daryl, what you just said about declining partisanship in Canada juxtaposes or contrasts with what we see in the United States, where a lot of political analysis takes for granted that the two parties have pretty hardened bases and they're competing for a pretty small fraction of accessible voters. What do you think explains that contrast between the two countries?
I don't think that the political parties have a tradition of meaning as much in people's personal identities in Canada as they do in the United States. I mean, we can have a conversation about our version of red states and blue states, but it's not really the same kind of thing. So there is a level of volatility in Canadian political choice that you don't see in the United States. Interestingly enough, in the United States, the biggest block of voters are actually independents. But we have seen a rise in partisanship and more kind of consistent party ID in the United States, but the independents are still a pretty large block of voters. In Canada, I would say the independents are probably even a bigger block of voters. Yeah. So people can swing back and forth depending on events, depending on leaders, depending on policies. Election campaigns in Canada are a lot more volatile than they used to be.
Yeah. Daryl, let me bring up, something I'm sure you've heard over the last few weeks in conservative circles, and it's this growing argument or belief that the polls are simply wrong, that their methodology is broken, something is fundamentally incorrect with the polls. They are not registering conservative support. Let's leave the rallies aside and what they may mean, because that's an entire known unknown. But I want to hear a little bit from you on why you think that the methodology, the approaches that you and your fellow colleagues in the industry are taking are, as you say, in that moment of time, accurately capturing public sentiment?
Well, just based on the record. I mean, we just take a look. I mean, and the way we've had to, pollsters in Canada, pardon me, have had to split the diamond or cut the diamond in the last two federal election campaigns, showing that, the Liberals were losing the popular vote, but actually winning the election and getting that correct is a very precise estimate to come up with. So we haven't had the same kind of issues. Now, one of the benefits that I have, because I work at Ipsos, and do run public opinion research and election research for the company worldwide, is I get to see this in a lot of places.
Hmm.
And where we tend to have problems in polling is when you have a group of people who systematically decide that they are not going to participate in polls. First of all, by the way, the consensus of polling in the last presidential election in the United States, even though Donald Trump was either a little bit ahead or a little bit behind, there were very, very few credible pollsters that were actually predicting that the Democrats were going to win. I knew what our polling said. We had Trump slightly ahead, but we knew that he was doing very well in the swing states, and we certainly were predicting that he was going to win, and that tended to be a bit of the consensus. So people who were saying, "Oh, the polls were all wrong," they didn't predict Donald Trump. Not true. Basically, people were predicting Donald Trump. If you go back to the 2016 election, actually the polls were pretty accurate. They said that Hillary Clinton was going to win by 2 points. She did win by 2 points. Unfortunately, what we were doing was measuring the wrong thing. Popular support was not correlated with what was happening at the state level in the very micro details you needed to get that election absolutely correct. So, I mean, the polling overall was correct, but they just got the result wrong. As I said before, we're measuring the wrong thing. There's been other things like Brexit. The truth on Brexit is some of the polls were right. Some of them were wrong. Ours was not correct, but there were other polls that actually were correct. So I think it's incorrect to say that the polls miss it. I think that this is the kind of the last resort for people who are trailing. The old days, it used to be there's a whole bunch of people who are really undecided and they're going to switch. Well, I can tell you that if somebody's probably undecided in this election campaign, they're probably not voting. They might change their mind, but they're probably not voting. We know that at least 35% of the people we interview on every survey are lying to us. Why? Because we know that turnout's going to be around 65. So we already know this. The interesting thing in Canada is we've been very lucky in which it tends to be proportionally allocated. It tends not to be a whole bunch of people who are going to vote one way that show up who are undecided swinging an election campaign. That's not what we tend to get in Canada. It is something that I've seen in other jurisdictions. So maybe we've just been lucky this far, who knows? But the idea that all of the polls are all consistently wrong in Canada and everybody's missing something, I find a little incredible.
Yeah, let's give you the last question,
Gerald,
Sean.
yeah, a major theme in this campaign so far has been fault lines, age fault lines, gender fault lines, educational fault lines. The past few days, there's been a lot of focus on the subject of Western alienation and even, in fact, Western separation. Why don't you just reflect on 30 years of polling experience and the extent to which you think those ideas have resonance, particularly in the province of Alberta, and if so, how that should be coloring our thinking and analysis of this particular election?
First of all, I kind of object to the term fault line because it sounds like a cliff or almost a binomial distribution. You're on one side or you're on the other. There's no in between. There's a lot of in between in all of these things. So when we talk about the generational fault line, it's just a generational tendency. And what tends to be different this time around is that younger people tend to be voting, particularly younger men, more likely to vote conservative, and older people are actually more likely to vote liberal, which tends to be, you could argue, a more progressive type of an option. That's flipping tendencies that we've seen in the past on their head. So that definitely is the case. As far as Western Canada is concerned, it's not really Western Canada, it's the Wests. To lump Western Canada all into one block is a mistake. I think British Columbia is very different from Alberta, and Alberta and Saskatchewan tend to be more similar, but Manitoba's even different from those groups. But there is a tendency in those places to be more blue or more voting conservative, particularly in the prairie elements in Alberta, than there is in central Canada or particularly in Atlantic Canada. So a little less of that than we've seen in the past. In fact, I think in the cities this time around, the Liberals are more competitive than we can remember at any time since back to 2015. But it's not a fault line. It tends to be more of a tendency.
Right. Well said. Well, Daryl, great to have you back here in Our Lady of the Snows, Canada. I'm sure we got a blizzard set up for us sometime before we get to the spring. So glad you can share that with us, and glad that we can share you with our audience during this election. Really appreciate your analysis and insights.
Always appreciate the questions and the conversation. Looking forward to some more.
Excellent.
Mm-hmm.
Well, Sean, we're going to say goodbye to our on-demand audio and video audience who've been tuning into this Day 15 show of the Hub's election coverage. And then in a moment, we'll say hello to all the good people that have been hanging out with us on the chat, listening to David Rosenberg and to Daryl Bricker. And we're going to get into their questions next. So here's that goodbye and then a hello. Goodbye, everybody.